Welcome back. Futures are higher this morning. We're expecting a rally at the start of trading. Trade tensions seem to be easing this morning. Chinese state media is reporting that Beijing will not include U.S. soybeans and pork in additional tariffs. Joining us right now is Mahoney Asset Management CEO Ken Mahoney. Also, the president yesterday basically gave some opening to the idea that he could do a small deal first and then a larger deal later. I don't know how that's going to fly with the American people, but Ken, is that what's driving these markets? I
think so. It's a better way of going about it. I mean, before we were playing liar's poker just a few weeks ago, and the market, was reeling, and we had those like meltdown Mondays down 800 points off of tweets that were kind of saying, "Hey, I raised you 25%. Oh, I raised you 300 billion." So that rhetoric really wasn't helping. Again, it worked really well with Canada, and it worked really well with Mexico as far as the NAFTA. But that type of posturing with China has not worked at all. It actually drove them further from the table. So he extended an olive branch. They've extended an olive branch, and the markets are kind of hoping that an interim deal could be.
So let me just point out, we're waiting on retail sales data out at 8:30, about an hour right now. What are you expecting there? Give us your assessment of the economy right now and the backdrop for investing.
Yeah, so I think the consumer is looking pretty good right now. I mean, we've seen all these numbers line up. CapEx spending is off a little bit. We're going to take some gains here, though. I mean, look, we were buying that dip pretty sharply a couple of weeks ago. We're going to sell a little bit into this rally because, we could set ourselves some little disappointment. Next week we had the Fed meeting, right, Tuesday, Wednesday. They probably will cut rates a quarter point. But what are they going to say? They may say, hey, we're done cutting rates for some time,
Do you think if the trade skirmish, or however you want to characterize it, begins to look like it might be resolved a little bit, do you think the Fed might hold off on cutting rates? Because the market would not like that.
That's a good point. I know that's Tuesday and Wednesday, so I think they're already going to, they're really telegraphed they're going to cut a quarter. Yeah. I know the president wants us to go to zero. I don't know why we want to go to zero. It's not, to me, a great policy.
Terrible idea.
Yeah. I think you want to keep some arrows in the quiver in case we really need it. And honestly, I'm at a point, again, they're going to cut rates a quarter. It's pretty much telegraphed. But I don't think they should cut it. I think they should keep some arrows in the quiver in case we really start getting some soft data. Our data is mixed, mostly to the upside, so it's hard to justify that sometimes.
Well, the rate cut is baked into the market now, don't you think?
Very much so. The quarter point is definitely baked. But what do they say? Hey, we're done cutting rates in the cycle. And also, let's say U.S.-China doesn't get the interim deal. And we've been back and forth this so many times, ping-pong match back and forth in the markets over trade and going through and so forth. So, hey, we get an opportunity to sell into this rally. We're going to do that. We're going to actually sell a little bit and get ready to reload when the market comes back down again.
All right, so you're expecting some volatility. You're expecting a decline.
Yeah, for some sophisticated investors, they should be looking at the VIX. I mean, the VIX imploded from like the mid-20s to now, I think, around 14 or under 14 this morning will probably be. And those sophisticated investors could buy some volatility here. So we don't have to pick the direction of the market saying, hey, next few weeks between China trade and the Fed, volatility probably increased a little bit. There's a pretty good trade right there for you.
It's very hard to imagine that the volatility of the market is gone.
Yeah, I mean, really, it's almost. I mean, if you look at the chart, we just spiked up, in late August, and here we are settling down so quickly, and almost shows some complacency, which doesn't make a lot of sense considering all the events that are going to take place in the next couple of weeks.
I think one of the things that has led to that complacency is money on the sidelines. I think there is a feeling that there has been this wall of worry. There've been, never has a market rally been so unloved or whatever. Right. Yeah. So perhaps that is a stabilizing factor.
Oh, look. Yes. Market averages are just a couple points away from all-time highs.
I mean, half of 1%. I mean, even when the market was falling apart and everyone's getting all excited, I'm looking, we're at 4% from all-time highs.
Exactly.
But the headlines were showing that.
Thank you so much.
Thank you.
Ken Mahoney joining us. Coming up, tech on